I know Laura has invited even some agents from other offices because other offices don't even offer things like this. So it's a really cool chance to get ahead, jumpstart on 2021.
Okay, and one last thing, wanted to show this. Mackenzie put this together for us, and so these are the birthdays for October. Upcoming birthdays, I guess. Yeah, upcoming birthdays.
Yeah, good
Josh
thinking.
Miller, Bob, Jeff, Chris, Robert, Heather, Freddie, Jennifer, Michael, Jenny, Jeannie, Marissa, Sergey, Kirk, Jaden, and Janice. So happy birthday, guys.
Look at all those October.
I know. So many birthdays. And Mackenzie is doing awesome on creating these really cool birthday graphics. She's going into high gear compared to what I was doing. So
yes. And you know what?
They're going to be really exciting to see on Facebook and stuff. So
last team meeting, I forgot to specifically introduce Mackenzie. So Mackenzie, will you show your pretty face?
I don't know if she might have to go in there in that office. Because I don't think she has a camera. But.
Mackenzie. Okay, she'll jump on in a sec. But she is our new Market Center coordinator sitting at the front desk. So if you haven't had a chance to meet her, she's here every day and, helping us out a lot. Oh, there she is. There's Mackenzie. So give Mackenzie a warm welcome. We're so happy. She's doing great. So, and happy birthday to all the October birthdays. All right. Awesome. We're good?
Yep.
And let's get into our main event. So Regina was nice enough to connect us with Jessica Greenlee. Hi, Jessica. And Jessica is from Affinity Property Management, and she is an expert on just the regulatory environment that we are in for our rental and housing market. So let's take it away, Jessica.
Yeah,
let us know if
you
want Austin to share the screen or if you're sharing the screen.
If it's okay, I can go ahead and start sharing the screen here, and I'll give you guys just a quick overview. Really, a lot has changed in the past several years. Just to give you a little background about me, like your colleague shared, I work for Affinity Property Management as Director of Operations, and have had the opportunity to sit on rental housing advisory committees, both at the local city level for the city of Portland, Multnomah County, Washington County, and also with the state. And so I tend to be very involved with some of the changes that have happened. And 2020 is a very unusual year. But I thought I'd break down the presentation for you guys in a few different pieces. One, kind of a historical background as to how the rental housing market has gone through so many changes over the past year, a timeline of what's occurred, a brief overview of the relocation ordinance policy for the city of Portland if you're unfamiliar with it. Then I'll dive into the fair ordinances, which is probably the most robust recent change, and then talk about the specific temporary changes for 2020 and likely those temporary changes carrying into 2021. I'm happy to take questions as we go through the presentation or take kind of a Q&A session at the end, whatever the preference is for the group. So this is just kind of a brief overview of the market and kind of what happened. So in the early 2000s, Portland started advertising the city very heavily. Pre-recession, we kind of became known as this urban utopia. And it started changing the mindset of what Portland was and started attracting people to move to the area. And post-recession, we actually continued on a really great growth rate comparatively to other West Coast cities, and so less of a dip than most other places. And one of the places that was very obvious was within the housing market. And so because of the popularity of the city, obviously, we saw an expansion of the number of people here, and we had less housing product available, and therefore we saw a dramatic escalation in rents. This kind of gives you just kind of a brief overview of that. You can kind of see some of the trends here, and I won't bore you too much with the details, but so the discretionary changes, though, really started ramping up in 2012 as far as rental rates, and started declining or leveling off in about the third quarter of 2016. there's a lot to it. Again, I'm going to just try to give you the Cliff Note version here. So you can see the rental rate increases on this bar. In 2013, 5.7% annual year-over-year increase in rates. 2014, 8.6. 2015, 12.7, and then 2016 came in right around 10%, with the bulk of that happening within the first and second quarters of the year. And so because of the rapid rate of rent increases across the city, just due to the increased demand, we started to see the regulatory environment change due to the lack of affordability and availability of housing. So the first indicator of that was really October of 2015, when Portland declared a housing emergency. And they also instituted a requirement of 90-day notices for rent increases at that point in time. And then 2016, there were some changes that occurred on the statewide level, including the construction excise tax being passed. And then SB 1533 removed the ban on inclusionary zoning across the state, which paved the way for the city to create an inclusionary zoning policy, which was implemented in 2017. Portland also passed in November 2016 affordable housing bond to help produce more units of affordable housing and meet the needs that they were seeing generated in the previous years, and that demand still is in existence today. So from there, in January of 2017, and I'll go into all of these in greater detail, I'm just trying to give you a brief overview of history. Portland passed the Portland Relocation Ordinance, which basically says that any increase over 9.9% or for any no-cause termination, which is essentially a notice that you send to tenants saying that you're not going to renew their lease, it's a non-renewal, would then allow the tenant the benefit of a relocation payment somewhere between $2,900 and $4,500, depending on the size of the unit. Portland then also formed the Relocation Technical Advisory Committee at that point in time, as there were some challenges with the way the ordinance was drafted. And that transformed into the Rental Services Commission at that point in time, shortly after theirs were involved into that. In July of 2018, Portland also passed a rental registration program, which you incur a $60 fee to register each rental unit that you have annually. This was how the city chose to take, to try to provide a better count and accurate data regarding the volume of rental housing stock, because we have a very diverse rental housing pool. About 60% of the rental housing in the Portland metro area comes from multifamily housing projects, which from the commercial side, which would mean 5 or more units, and the other 40% is made up of single family and then smaller multifamily housing developments, your duplexes, triplexes, and fourplexes. It's an approximation based on census data. It's not an accurate count, and so the city is trying to get a better sense of what rental housing stock does exist. So shortly after that, in 2018, the city started discussing what has become known as the FAIR Ordinance policy, which is a combination of application and screening criteria and security deposit regulations regarding rental housing. And at the end of 2018, the HB 2001 eliminated single-family zoning, which has since just passed to dramatically change the availability of development opportunities within the city of Portland. Most zoning options now allow for a minimum of 4 units to be built where previously only a single family home could be located. And then in March of 2019, at the statewide level, somewhat in response to Portland's relocation ordinance, SB 608 was passed, which implemented a statewide rent control policy that's 7% plus CPI. CPI is readjusted annually by September 30th for the next calendar year. This year, the combination between CPI and 7% for 2021, the maximum rent increase allowable is 9.2%. In 2020, that maximum rent increase level was 9.6%. And again, that's adjusted annually every year at the end of September. It's usually published within the last 5 days of the month. And then in June of 2019, we saw the Portland City Council pass the fair ordinances that had been in development for the previous year to go into effect as of March of 2020. The actual rental registration fee amount was established in August of 2019. The first year of rental registration did not incur a penalty or fee. However, after that, for starting in 2020, it is the $60 rental registration fee. And then in 2020, things get a little crazy, and we'll kind of dive into some of the details on this later in the presentation. I really would like to separate permanent change from temporary regulation. And essentially in 2020, right after the fair ordinance went into effect, there were a series of changes, including statewide eviction moratorium, city and county-wide eviction moratoriums, the federal eviction moratorium, all with their own set of regulations. And yesterday, the state extended the statewide eviction moratorium through 12/31 of 2020, and later I'll explain why that's significant. And the county last week passed their own eviction moratorium extension through January 8th of 2021 with an extended repayment period. Is anybody ready for naps yet? Sorry for the long diatribe there. Thanks for your patience. So rent obviously feeds a lot of different industries, and I'm happy to share this information with whomever needs to, but there's a trickle-down effect for those sellers. And these are all things that should be considered when budgeting for a rental housing unit as well. That includes making sure that you're factoring things like your mortgage, any employment costs, taxes, utilities, insurance, contract services, professional services, any supplies that you may need either from a repair and maintenance side or from an administrative perspective, and then of course construction costs. And so those are all external industries that are impacted by the rental housing industry. New construction starts. This is helpful in predicting where rental values will go along with population trends. And so we definitely monitor this closely. In Portland specifically, it typically takes 3 to 4 years to get a new project from concept to development, where you're actually moving people into units. And so you'll often see a lag from the time that projects go into permit the time that units are available on the market. So it's important to kind of be able to project future values, to pay attention to new and construction starts as well. So the Portland Fair Ordinance is probably what most people will have questions on. I think this is one of the most robust set of policy changes in the nation. And with that, there's going to come a lot of ambiguity and uncertainty within those policies because there's no case precedent in place for them. But again, I'm going to give you a brief overview. This is not legal advice, and if you have specific questions regarding a scenario, I would encourage you to consult an attorney. So these policies went into effect March 1st of 2020. Portions of the policies have been listed specifically for victims of the wildfires across the state. And so we can talk about those if you have any specific questions on that. There were some consequences to the fair ordinance policies, but I also want to talk about the reasons behind it. Essentially, the goal for the fair ordinance was to provide a more equal playing field for people looking for housing opportunities. Due to the rapid escalation in cost of rental housing between 2012 and 2015, is it caused a certain amount of displacement in areas across the city. And so the goal was to make sure that everyone had equal access to housing. A lot of the components of the Fair Ordinance either exist in federal law now, and these policies expand upon them, as well as introducing new concepts. There are some consequences of the Fair Ordinance, and so it's important to factor in the costs associated with this, and we can kind of go through what that looks like. So one of the key drivers of the policy is the marketing requirements. So there's a 72-hour waiting period between the initial advertisement of a unit and processing and approving the first application. I would like to note that the Fair Ordinance has changed 8 times since passage, and so it's possible that the terms that are being used in this particular slideshow may be a little dated or can continue to evolve. The intent of it, though, is to make sure that no one obtains an apartment for at least 72 hours so that everyone has an opportunity to find out about its availability. There's an additional 8-hour waiting penalty or period for ADA type A units. So this requires you that if you have an ADA accessible unit of type A, that you must wait that additional 8-hour time period before assigning that unit to somebody who's applied for it, to allow the opportunity for anybody who may have a mobility disability to be first in line for that unit. The specific advertising requirements that must be included in the advertisement, this includes yard signs, like for rent signs, any type of advertising that you may publish. So it must include the date and time of the start of the open application period, a description of factors for evaluating applicants, so that's the screening criteria, an indication of whether or not the unit is an ADA type A unit. And additionally, you can advertise multiple units at the same time if you also add the number of units being advertised, the range and number of bedrooms, the range in sizes, and the range in rent. You can meet these requirements by making sure that your advertisement has a link or some kind of location listed on the advertisement of where to find this information. You do need to indicate on the advertisement, though, that it is specifically to locate Fair Ordinance requirements or advertising requirements. That can be a link to a website, and a location where you have a sign posted with all of the specific requirements, like the screening criteria. Those are both options for you. In addition to the marketing requirements, the application must also contain some additional options for tenants to disclose information. You must be able to the applicant has to be able to indicate whether or not a household member is mobility disabled, and you must indicate on the application whether or not the unit is an ADA type A unit. The applicant, you need to allow an option for them to notate whether or not they want to be considered a financially responsible applicant. This is one of the unique things about the Fair Ordinance that is important to pay attention to. They've created a new class of tenant in this ordinance, and that means there's financially responsible applicants and non-financially responsible applicants. A non-financially responsible applicant can be an adult, does not have to be a caregiver or minor, but you do not have the ability to screen them for credit or to pursue any action towards any financial obligation associated with the lease. However, they have full lease rights outside of the financial obligation to pay for that lease. And there's no real case precedent at this point in time as to how to handle situations for individuals who the financially responsible applicant might vacate the unit, but the non-financially responsible applicant remains. So that's still being sorted through with the courts. So the applicant has to be able to indicate whether or not they've applied in another community that you've owned or managed within the past 60 days. That's actually a statewide requirement. You may not charge an application fee for somebody who's applied at another one of your properties within the past 60 days. You have to add a disclosure that the applicant may provide supplemental evidence at any time during this application process. You need to make sure that your screening criteria has been modified to meet the ordinance requirements and provide a copy and obtain a signature that the resident has received a copy of the screening criteria. You have to provide several city-created forms, including a notice of right to modification or accommodation. Provide an applicant a statement of applicant rights and responsibilities produced by the Portland Housing Bureau. And you must manually or digitally record the date and time of each application and provide a record to the applicant within 5 business days of the request. So there's a specific order of application processing that's also required. So if you've received multiple applications for the same unit, you have to follow a specific process. So if an application was submitted prior to the start date of the open application period, you have to mark their application as being received 8 hours after the start of the open application period. That's really key. It's even if you've received that application first, you must mark it as being received 8 hours afterwards, and you must maintain a track record of both dates and times. So the applications received prior to that, to the open application period, must be processed in the order of actual receipt. So you still process them in their newly dated order. So if you potentially received, let's say, 4 applications prior to the start of the open application date and time, you would mark them all as being received 8 hours after the start of the open application time. And if you received no applications in the first 8 hours after the start of the open application period, then you would process the first application you received. If you received applications after the start of the open application period, that date and time, you would first process any applications you received during the first 8 hours of the open application period. For ADA type A units, it's a little different. You have to make sure that you're paying attention to anybody who may have indicated that they have a mobility disability, or who has a household member who has a mobility disability. And you have to process those applications first. So the order of operations, and I'm happy to share, I noticed a couple comments asking for the slideshow, and happy to share the slideshow with everyone if you want the details on that. But the important takeaway is if you have an ADA type A unit, those with the mobility disability, you need to pay attention to first. And let's see if I can get my slideshow to move forward here. Okay, so this is kind of a slideshow or slide that we provide to our staff. We just provide set dates and times for the open application period to limit confusion. So the open application day, we just indicate for our teams 10 a.m. to 6 p.m. It clears up the confusion. That's considered your open application period. Anything received before 10 a.m. on the open application period gets evaluated differently. Anything received after open application day, it's fair game. I mean, I know a lot of rental housing providers would love to have a stack of rental applications waiting for them for open application days. It's not very often that you run into these conflicts where you have multiple applications and you're trying to figure out which one goes first. But there's a couple of good slides in here that we'll make sure that get circulated to you that explains the order of application processing. And I'll kind of skip ahead there, but the next thing that you have to consider is your screening criteria. So the city changed some screening criteria that covers all types of screening, and then they provided 2 pathways for screening criteria for everyone to consider. There's an individualized assessment route, and then there's the city standardized route. For all screening criteria that you establish, you must conditionally accept, or deny applicants within 2 weeks of receiving their application. If denying an applicant, denial must come from the landlord, not a third-party screening company. You have to issue it directly. So you must enter into a rental agreement if approved. And we can talk about the challenges of that particular language here later in conversation. Applicants' identification options. So they've expanded the list of requirements as far as what people can use for identification. So it's evidence of a social security number, valid permanent resident card, immigrant visa, an individual taxpayer identification number, non-immigrant visa, any government issued identification regardless of expiration date, and any non-governmental identification or combination of identifications that would permit a reasonable verification of identity. The rent to income ratio has also changed. So now the city has mandated that we have 2 options really, 2 times gross income to rent. So that would mean pre-tax income, gross income to rent is the ratio that the city has mandated, unless your rental rate is below 80% of MFI. So that means that the median family income level of your rental rates, and the city publishes a chart on this annually, and it is released April 1st of every year. Then you can use a 2.5 times gross income to rent ratio. You must allow guarantors if the applicant does not meet the rent to income ratio of 2 times the monthly or income to rent ratio. And the guarantor's maximum restriction that you can post on income to rent ratio is 3 times gross income to rent. So to kind of explain the difference, previously the industry standard was 3 times rent income ratio. So for your gross income would typically need to meet 3 times what your rental rate was. And that has moved down to 2 times what your rental rate is. The other key thing too is your guarantor agreement cannot exceed the term of the initial rental agreement. So if you have a 6-month lease, you can have a guarantor in place for a 6 month, that first initial 6-month term, or a 12-month lease, the first initial term of that lease, regardless of what that length is. And so the city then from there provides rental housing providers 2 pathways to identify how they want to process their screening criteria. There is a low barrier set of criteria which the city outlines within the FAIR ordinance. And then alternatively, you can choose to use an individualized assessment method. Or you can set your own screening criteria, but then must take additional steps to evaluate the application independent of the screening results. The low barrier limitations on criminal history, so you cannot consider arrest records, diversion or deferred judgments, convictions that have been dismissed, expunged, voided, or invalidated. All 3 of those options are currently federal law now, so those are not changes. Convictions for crimes no longer illegal in Oregon, that is a change. Juvenile convictions, again, that's already a federal mandate. You cannot consider those. Those are typically sealed or expunged or at that point in time. Misdemeanor convictions for which the dates of the sentencing are older than 3 years, or felony convictions for which the dates of sentencing are older than 7 years. And it's important that you pay attention to the date of sentencing, because that is not often the default setting for most screening criminal background searches. So it's not the date of the initial arrest. It is not the date of release, which are 2 heavily publicized dates in most criminal record searches. It is the actual date of sentencing. And so you do have to do some additional due diligence to make sure you're using the right time frame. An individualized assessment would allow you to maintain whatever your current screening criteria is. However, if you would deny the application under your current screening criteria, you have to conduct an individualized assessment before issuing a denial, which would be considering the nature and severity of the incident leading up to the denial, the number and types of incidences, the time elapsed since the date the incident occurred, the age of the individual at the time of the incident, and all other federal, state, and local ordinances. Then when issuing a notice of denial, if you've gone through that individualized assessment process, you must explain the basis of the denial, and you must also explain what you've done to evaluate and the additional supplemental evidence that the renter may have provided. It's very crucial that you detail that out, and there's a city form that you must use to process out. On the low barrier side, for financially responsible applicants only, because remember the City of Portland created a new class of renter. So you cannot evaluate individuals who choose to apply as a non-financially responsible applicant or credit criteria. But for financially responsible applicants, a low barrier screening, you must accept those who have a credit score of 500 or higher, insufficient credit history. So in other words, if you get a credit report back but it just shows no credit history, you still must accept that because there's no negative information contained in that report. Negative information provided by a credit agency for past due or unpaid obligations of less than $1,000. So you must disregard information about any debt that's less than $1,000. And then prior rental property damage of less than $500. You need to exclude those from your evaluation processes. Those cannot be considered. Any discharged bankruptcies, Chapter 13 bankruptcy that's under an active repayment plan, and you may not consider medical, education, or vocational training debt. So you cannot consider student debt or medical debt in your evaluation process. And again, for an individualized assessment amount, you can do the same type of process that we just discussed on the previous slide, evaluating them on an individualized basis, considering the nature and severity, the number and types of debt that they have, the time that's elapsed from that debt, and the age of the individual that the debt was incurred. You must, if you were going to deny on the basis of one of those elements, for an individualized assessment, explain the reasons that the supplemental evidence did not adequately compensate for the factors that informed your decision. So really, really crucial that you have a detailed review of your screening criteria and a clear explanation of the reasons for denial. So for rental history, a similar thing. So you must accept insufficient rental history if you're using the low barrier screening criteria. So unless the applicant withholds information in bad faith. So for example, if you reach out for rental history, but then finds that there is none available, and the applicant chose not to disclose their previous landlord's information to you, and you find a rental history reference at that point in time, that would be considered bad faith. So that would be the only time you could consider the rental history information, that if they didn't provide it and there was rental history information, that would be, it would cause you to consider their screen or their application differently. So you must accept all verbal and written references from prior landlords, except for defaults in rent, 3 or more material violations of rental agreement within 1 year that results in the application and notices issued to the tenant, outstanding balances of less than $500, and lease violations resulting in a termination with cause. So you can consider those factors when they're there. So if the balance is more than 500, you can consider it. If there are lease violations that occurred that were not financially related, you can consider a termination for cause. And again, that individualized assessment route is still open to you to use.
And
applicants have.
Just
Go ahead.
really quick. This is all really good information. And I think it's important for, as real estate agents, to think about what do our big takeaways need to be as we watch this, and just the information that things have changed and there are a lot more regulations in place, and not necessarily worrying about memorizing all the little details, but like as our clients ask us, oh, is it a bad time to have a rental house? Or, oh, I've heard about all these changes in Portland. Like, should I stop investing? To be able to intelligently have those discussions. So hopefully that's the goal of, the takeaways as we continue to read all this, since so many of our clients are investors or have rental properties.
And I'm happy to do a more high-level overview too if we've gone into too much detail here. I appreciate you kind of giving me that feedback.
Screening, maybe. It's great information. It's great information.
Well, you guys have the slides, and you're welcome to circulate those along. It's just something to know that the screening process has dramatically changed. So it does change your ability to mitigate risk. There are some exceptions available within the code, tenancies. So tenancies where applicants would apply in one dwelling unit in a duplex as well, that may apply to some of your clients. So where the landlord lives on one side and the renter lives on the other side. So that definitely is a factor, as well as accessory dwelling units. So they exist under a separate set of regulations, and that's something to kind of consider. The damages are steep. It's $250 per violation, plus actual damages, reasonable attorney fees. There's 37 ways to violate the screening criteria alone. So it's just really important that you're very conscientious and take the time to get legal guidance if you do consider providing rental housing. And it is something that I would highly recommend having an attorney review your process. There's a second part to the fair ordinance, and that has to do with security deposits. So there are limitations regarding how much you can charge for security deposits. The maximum amount is 1 month's rent. You can require an additional or you may only require a half month's rent in security deposit if the last month's rent is required. Conditionally approved applicants can be charged an additional half month's rent in place of a guarantor. So if somebody does not meet the rent-income ratio and does not have a guarantor available to them, you must either allow them to, you must conditionally approve them and allow them to pay an additional half month's rent in security deposit. And tenants are allowed to pay the deposit over a 3-month time period. They are not required to pay that deposit upon move-in. Something else to be aware of. Deposits have to be kept in a separate banking account. So you must locate the name and the financial institution and the address in the rental agreement, and that only applies to new rental agreements after March. There are some specific provisions around interest on that account. My personal recommendation is to just put in a 0 interest bearing account. Private deposits are not currently regulated by the ordinance. It falls under separate state codes.
Oh, and we have a question.
Yeah.
What about giving renters notice to vacate, to sell a home? And are all 3 counties the same? What information do you have about that?
Sure. So there's quite a bit on that right now. So under the relocation ordinance and also under SB 608, you do have to provide a 90-day notice to vacate to that resident and notify them of the sale, which I know doesn't necessarily align with FHA guidelines. So there are some exemptions associated with SB 608, but not with the City of Portland's ordinance. So you have to notify the renter that you are putting the home up for sale in advance and provide a notice of vacate before you have it under contract, essentially. So there's that 90-day time period. And I know closing time periods are usually tighter than that. So it's just a factor to keep in mind as you go through that process. They are looking at realigning.
Oh, does it start when you notify them, or does it start when you go under contract?
It starts when you notify them.
Okay.
and start when you notify them. And they are looking in a long session at the state level to realign the ordinance with FHA guidelines for the 60-day time period. So there's some thought being put into making sure that that's a little bit more feasible going forward. Something else to factor in, you have to maintain a depreciation schedule for rental units now. You have to notate every item that is in a unit. If you plan to deduct that from the security deposit, you have to maintain a schedule and provide it at the time of move-in for the tenant. So this is really important, and oftentimes it's done in due diligence before purchasing the rental unit. And you've got to have the records essentially available for every appliance or fixture that might be in the unit, that if you plan on charging the resident for any damage incurred in the unit. So when you're looking at transactions, it would be important to make sure that you've got the property maintenance records available in that process. There's some strict timelines as far as tenants moving in and how long they have to complete their condition report, and when you have to return a condition report to the tenant if they do not provide one to you. Highly recommend documenting the condition of the unit with photographs and maintaining clear records of all repairs or replacements done to the unit. So all notices of non-compliance issued to tenants regarding this must include a rental history form provided by PhD. So that's something else to pay attention to, is that if you send a late notice, any kind of notice to your tenant regarding like patio furniture, anything like that, that could result in termination at any point in time, or any language associated in it that says it could result in termination, which if you use any forms, like pre-generated forms that likely will contain that language for your protection, you must send a copy of the rental history form and a payment history within 5 days to the tenant of issuing any notices like that. And then upon move out for tenants within 5 business days, you've got to provide a written accounting to the tenant of the tenant's rental payment history covering the prior 2 years of tenancy and a fully completed rental history form. Within 1 week following the termination date, the landlord has to do a final inspection of the dwelling, and then the tenant does not need to be present but must be given 24 hours advance notice. The landlord must provide the tenant a written accounting of the use of any security deposit funds used to cover costs for repair or replacement within 30 days and a refund of any unused amounts within 31 days. They did just recently realign that. I apologize. It's now, they're both aligned with the state code of 31 days. And any labor costs must include a comparison of reasonable and consistent charges across the industry. If you hire a plumber to do a repair, you need to have bids from multiple plumbers to show that it was a reasonable rate that was charged to complete the repair. There are some allowable deductions that the state law overrides the local ordinance as well, so it's probably a good idea to consult an attorney. Damages are 2 times the security deposit, it's reasonable attorney fees, and there is no prevailing party provision, which means if you go to court and you lose, you pay the attorney fees for the other side, but if you win, the other side does not have to pay your attorney fees. 2020 kind of gave a whole new set of challenges to rental housing. That started with the eviction moratorium passed in March of 2020 by Governor Brown through executive order, and that was a temporary provision until they went into special session. It did include the potential criminal charges if you violated the executive order. In June, they passed HB 4213, which essentially prevented action towards eviction during the emergency period of April through September 30th, and created a 6-month grace period for repayment for all rent incurred between April 1st and September 30th to be repaid as of March 31st of 2021. Yesterday, Governor Brown passed an executive order that extended the eviction moratorium through December 31st of 2020. It did not extend the repayment grace period. The county, Multnomah County, so that covers most of Portland, also instituted their own eviction moratorium extension through January 8th of 2021, and they extended the repayment grace period for another 6 months. So if the property is located in Multnomah County, renters have until July 8th for repayment of any back due rent from April 1 of 2020 all the way through January 8th of 2021. There's also a federal eviction moratorium in place through the CDC, which goes through December. However, it has a provision that says that the tenant must provide a declaration of need that is COVID-based at the time of stating that they're unable to pay to avoid eviction. So that's the main difference between the CDC order and the state order. The state order does not require any communication from the tenant to state that they're unable to pay or that it is COVID related. The tenant has to take no action at this point in time. The city of Portland also reduced the relocation amount down to 0%. So any rent increase within the city of Portland will automatically trigger a relocation payment for a renter should they choose to move because of the rent increase. So if the tenant indicates to you through actual notice, which would be a verbal or written communication that says, hey, I can't afford this rent increase, I intend to move, which is different than an actual notice to vacate, then you are required to pay that tenant a relocation payment within 45 days of receiving that actual notice. The tenant does not need to move in order to receive the relocation payment. The tenant has 6 months to either repay the relocation payment or to relocate, or to provide you with a notice to vacate. So it's just a clear distinction there. The state's eviction moratorium also does prevent any rental debt from being sent to a collection agency or being reported to a credit bureau. So that's something else to keep in mind. Currently, those restrictions are in place until March 31st of 2021. There will be a special session coming up in November. It has not been announced yet, and we do anticipate that these restrictions will be in place through the remainder of 2021. That was a lot, and so I'm happy to answer any specific questions that you might have.
Jessica, this is all such good info. Heather and I are sitting here talking how now it's a little scarier to have a rental without a property manager now, because there are so many things you just need to be aware of. And so it's not that it's like too scary to have one, but it might be too scary to manage on your own.
Definitely.
Right. Linda asked a couple other questions. So what if the tenant gives notice? Are there like certain day requirements? And then a secondary question is, if a landlord increases the rent, does that notice of rent increase have to come with a renewed lease, or can it just happen on a month to month?
So a notice of a rent increase, if it's within the city of Portland, if it's more than 5%, has to be sent 94 days in advance, 90 days plus 4 days for mailing in order to be in compliance. It would not come at the same time as the renewal offer, necessarily the actual new lease. So you do have to provide that notice prior to entering into a new rental agreement. However, the tenant can choose, once they receive that notice, to enter into that new rental agreement at any point in time. If that notice is less than, or if this rent increase is less than 5%, then you have to send that out 60 days in advance. There's also some additional state requirements involved. And I apologize, you'd asked an additional question before that, and I got.
Yeah, what if the tenant gives notice? Are there any requirements?
So it depends on what your lease contract states. So currently in Oregon, you cannot charge a lease break fee. So if you have a provision in your lease that states the tenant owes 1.5 times month's rent for turning in keys and not providing notice, you are not able to charge that currently during the eviction moratorium. However, and each county is a little bit different on that. It just depends on where the building is located as to what the provision is. I should say that's specific to Marion County, Lane County, Deschutes, and Multnomah County right now. Washington County and Clackamas County, it's different. But the tenant, typically most leases would be required to provide a 30-day notice to vacate. Is what most standard leases are. It just depends on what your contract states. It cannot be more than 30 days, so you cannot require more than 30 days.
Does anyone else have any questions? Oh, wait. Linda, what is the break lease rules for Clackamas and Washington?
So Clackamas and Washington don't currently have any specific restrictions on lease break fees. So you could still try to charge them. It would be unlikely the judge would honor that though. And you cannot require the tenant to pay that because you can't collect right now.
And that's just because of the moratorium. After the moratorium is over, that's back to regular. Okay.
Yes. So, and I think that's a great distinction. There's definitely a difference between all of the temporary regulations that's going on due to COVID and the fact that we're in the middle of a global pandemic, and then the permanent regulatory environment. The fair ordinance, that's going to be here for a long time, those additional rules, and is likely going to roll out to a statewide level in some form. Whereas the eviction moratoriums, some of the notice requirements that you have currently, the restriction on rent increases, that's temporary regulation, right? Right now, the ban on rent increases essentially goes through March 31st. The eviction moratorium goes through the end of the year or January 8th, depending on where the property is located. So there's probably a lot of opportunity, honestly, to pick up properties. I would anticipate, though, a lot of these restrictions remaining in place in some form through 2021.
Great, Jessica. Thank you so much for all of that information. And let's see, so Chris says, so in Clackamas County, landlords, property managers cannot charge a 1.5 months rent if a tenant breaks a lease?
You can charge it, you can't collect it. That's the distinction right now with the eviction. So statewide, you can charge it, but you cannot collect it. In specific counties, you cannot charge it at all. So I think that's kind of, I know that's a little nuanced, but in Clackamas County and Washington County, you can actually charge it to the tenant, but you can't obligate them to pay it, and you have no method of being able to collect it. So it's kind of
so they couldn't collect it after the moratorium?
Not until after March 31st of 2021. But there's a statute of limitations in place as well. So statute of limitations for all rental debt is 1 year in Oregon. And keep in mind that the moratorium was backdated to April 1 of 2020. And so it is highly unlikely that you would have the ability to collect on that at this point in time. You could try.
And so they couldn't send them for collections. They couldn't do any of that if somebody refused to pay that.
You cannot.
And so you're saying that the statute of limitations, because they couldn't try and collect that until March of 2021, would have already expired.
That is correct. Depending on the date that it's charged. Right? If you were to charge it October 1st, you would still have 6 months after the expiration of the eviction moratorium collection requirements, right? So you could attempt to collect it at that point in time. But I'm just saying right now though, you would have no active ability to collect on it. And again, a lot of these are very nuanced and it requires a conversation with an attorney. It depends specifically on where your building is located and the specific circumstances. In Clackamas County, Washington County, you can charge it. Nowhere in the state can you take action to collect it. That doesn't mean your tenant can't pay it to you, right? As well though. Like you can tell them this is a fee on your account. You were entitled to that fee. You just have no mechanism, legal mechanism to pursue that debt at this point in time.
That's super confusing.
I know.
It's just super confusing.
Yeah, lots of.
I know. It's
But
very nuanced, and I apologize. I wish it was.
I don't know how you do it.
yeah, we
There's a
appreciate.
lot to keep track of.
It does kind of make sense though that given all these regulations that there's going to be some movement of maybe people who have been investors might want to sell their investment properties. Maybe, you know, they might sell them for less. Maybe people who want to get into it might, you know, pick those up and, you know, wait for the like moratorium, you know. So it just I think the underlying thing to remember is that this will cause movement, right, in the housing market, and to just think about how you can help guide and provide value to your clients who are looking for this information.
Yeah, and when in doubt, be sure to refer them to an expert. This is like very confusing. Exactly, Chris.
I think that's very good advice. I mean, there are a lot of professionals within the industry who have a good understanding of the regulatory environment and all the parameters that are in place, and it is very helpful to have a property manager. I think it's definitely worth the small fee that you end up paying for that service to be able to have that extra layer of protection in place. And another thing to keep in mind too, if you work with clients who are looking at single family rentals or smaller communities like duplexes and triplexes and fourplexes, the market has definitely shifted dramatically. People are looking for space, and the demand is huge in the rental market for those single family rentals, larger size units, 2 and 3 bedroom units. The vacancy rate in downtown Portland is close to 12% with an average 3-month concession going on right now. All of those people haven't gone that far, right? They're still here. They've got work, jobs, family, life that exists here. They're just looking for other housing types and opportunities. So the vacancy rate in single family multi-family rentals is practically zero right now. So there's a huge demand for those single family rentals, for those larger size units. And again, a lot of the restrictions that I talk about are the challenges you face when something goes wrong. But the percentage of times that it goes wrong versus right is relatively small. So most of the time people are very responsible, they're paying their rent, abiding by their contract. We have seen industry-wide an average of 90% collection rate even into September, when a lot of the additional assistance funds have come out, like the additional pandemic unemployment assistance and things like that. So the majority of the time you will end up in a good position, especially if you have larger size units.
Great. Thank you so much, Jessica, for being here. This was really, really
You're welcome. Have a great day, guys. Thank
yes,
you.
you too. We'll post Jessica's slides with her contact info too, so if you have additional questions. So thank you so much.
Thank you.
Good day.